You're watching Mirror 7 News. Stay informed, stay ahead for more news.
Hey everyone, let's break down what's happening with Nasdaq futures and why markets are on edge right now. Over the weekend, tensions between the US and China escalated again, and that sent ripples through global markets. It all started when President Trump reacted strongly to China's new export controls on rare earth minerals, calling them surprising, and accusing Beijing of becoming very hostile. But according to China, the blame lies with the US. Specifically, Washington's recent expansion of curbs on Chinese firms triggered the latest tightening of controls over these critical minerals, which are essential for everything from electronics and cars to semiconductors. The escalation prompted Trump to announce that tariffs on China could be restored to triple-digit levels, and China quickly responded with a vow of corresponding measures. Markets reacted nervously, given the memory of past trade disputes when both countries imposed hefty levies, effectively choking imports and exports. Analysts are warning that these renewed tensions could derail the progress made in months of trade negotiations, and there's uncertainty over whether a planned meeting between Xi Jinping and Trump in South Korea later this month will still happen. From China's perspective, the current escalation was avoidable. Just 10 days after a positive call between Xi and Trump in September, the U.S. expanded its export restrictions, adding thousands more Chinese entities to the control list. Experts in Beijing have called these moves petty maneuvers and argue that China's recent actions were simply a proportional response rather than a fresh attempt to gain leverage. The new rules specifically target rare earth minerals, expanding the elements under export control and covering technologies used in production, even if those minerals are processed by foreign firms with Chinese technology. The ripple effects have already hit global supply chains. Factories worldwide, from automakers to defense contractors, are feeling the squeeze, and the AI sector could see delays due to the reliance on chips produced using these materials. Still, Beijing has clarified that this isn't an outright export ban. They will approve licenses for firms that meet the requirements. Essentially, China is mirroring tactics historically used by the U.S., highlighting a tit-for-tat approach that has characterized trade relations for years. So what does this mean for Nasdaq futures? Investors are watching closely, as the uncertainty around tariffs and export restrictions is weighing on tech-heavy stocks, which make up a large part of the index. Any escalation could trigger volatility, while a successful negotiation between the leaders could ease market nerves. Right now, the ball is in Washington's court, and traders are digesting the news cautiously, weighing the potential consequences of a standoff between the world's two largest economies. In short, Nasdaq futures are wading through a storm of trade tension, market anxiety, and geopolitical maneuvering, with investors hoping that diplomacy eventually takes the lead over confrontation. Stay subscribed for more videos.